In fact, there's a study by this investment research firm that backtested 10 years of stock market data and found that if you missed the 10 best market days, meaning you kept trying to sell when the market was down and trying to buy when the market was up, then you would stand to lose, on average, 66% of the gains you otherwise would have made if you just stayed invested in the long term. Meaning if you invested 100K and you just held it for the long term, let's just assume it goes up to 200K. But the study is saying that if you let emotions drive your decisions, you might only end up with 144K. And the simple explanation is when the market moves up, it moves up very quickly. Which is why it is crucial to stay invested, because it is impossible to perfectly time the market, which is why time in the market is much more important. In fact, there's data that shows 90% of people who take on day trading or super short-term investing, they end up losing money. Some studies say only 1% of day traders are profitable. You see, some of the best investors in the world, they just buy their investments and then they forget about them. Because over the long term, there's a really good chance that your investments will be much higher than what it is right now.